And we're back. Welcome back. Be sure to join us next week. We'll have a very special guest, Jerry McManus, our team leader from our Keller Williams Realty office in Escondido. She'll be sharing with us what makes Keller Williams, and especially our office, so amazing. All right, short sale secrets. We're going to talk a little bit about pre-approval letters and how a lot of the pre-approval letters that were issued a few months ago are no good anymore. Approval times, we're going to talk about extensions of current protection laws, and specifically we're going to talk about what you can do if you're thinking about doing a short sale and you have a home that has damage. So let's talk about, first of all, pre-approval letters, Anthony. We've talked during the show about the fact that interest rates are rising. A lot of cancellations are happening right now because these buyers that were involved in these short sales 3-4 months ago were pre-approved at 3.5%, and now interest rates are at 4.5%, and their lender can't figure out how to make it work for them.
Right.
Talk a little bit about how you can go about addressing something like that. So say somebody's in that type of a situation, right? Let's say they're in that type of situation, they're getting ready to lose their deal because they can't qualify. If they call you at 858-550-2580, 858-550-2580, what specifically can you do for them if interest rates have gone from 3.5 to 4.5 and their lender's telling them they don't qualify anymore?
You know, that's a great question. Actually, people don't really recognize how many options they really do have.
Right.
So, just let me start off with this. In between each bank, typically we have the same type of overall conforming guidelines. So whether it's FHA or conventional or VA, so we have the same fundamentals as far as that's concerned. But within the banks themselves, they have what's called overlaying guidelines. So they try and limit their credit quality, or their credit risk, I should say, and by whatever their interpretation is. Maybe they have a debt-to-income expense that's limited at 45 or 43 or 41, or FICO scores that they won't do below 680 or 640 or whatever.
And let's talk just real quick. I don't want to interrupt you, but let's talk about this for just a second. They're called overlays. Okay, in the industry. And what people need to know, and I want our listeners to understand, is that an overlay, there are companies out there that have a lot of overlays, and there are companies out there that have maybe one or two, right, and some that have none. If a lender has a lot of overlays, what specifically are they trying to do? Are they trying to limit dramatically what their risk is and make a borrower fit into a smaller square, so to speak, right?
So if you look at a lot of the larger banks, they have much more retention of the loans that they carry than they used to sell. So now they're more liable.
So now they're servicing them.
They're servicing those loans.
Okay.
They're the actual.
They're collecting the payments. They're holding onto the paper. What we call holding onto the paper. Okay.
Right. So they're trying to limit their exposure to risk.
Right.
That's all it really boils down to.
Right.
And if they have a large enough clientele base, not to mention any of the larger banks, but they have a big enough clientele base, it's not such a big deal when they limit 10-15% of the overall market that they could be getting, because they don't want that risk.
Right.
So when the first thing that we do,
and just so we're clear, lenders hate risk.
That's right. It goes without saying. But
sorry, go ahead.
As far as the overlays are concerned, what I mean by options is it could be a matter of how the deal was structured.
Right.
So could there be a potential of paying off existing bills or debts? Can we do some of that, or can we source additional funds and put more reserves in? Could we change the program type? Maybe somebody plans on only living in a house for 3 years, and maybe a 5-year ARM or a 7 or a 10-year ARM with a lower interest rate is a better option for them.
Right, great idea.
So there's a lot of different things that we can do. Sometimes it's just, when you're working with an 800 call center, that it's just a person to look in the screen and give you the intel and not give you the structure or the prescription. That's the biggest difference that people really don't see on the back end of things.
Right.
So people really do have a lot more options than they know.
And let's be honest, an 800 number that you call, you don't know what type of overlays they have. And the more overlays they have,
they don't even know.
Right?
They don't even know.
Right. The more overlays they have, the tougher it is for you to qualify as a borrower.
Yeah.
And so one of the advantages that people have of talking to you and working with you, and by the way, if you're in this situation, if you're up against this and you're a buyer, and you're trying to buy a short sale and your lender's turned to you and told you that you've been turned down, give Anthony a call today. His number is 858-550-2580. It's 858-550-2580. And what he'll do is what he does for us every day, which is go to work trying to figure out a way to solve the problem. figure out a way to get you approved, figure out a way to make it work. It might be, like he's talking about, as easy as moving some money around. It might be a situation where you change programs. One of the things that makes Anthony so amazing is the grasp that he has on Prospect Mortgage's guidelines. Prospect Mortgage has a different set of overlays than the rest of the world does.
Right.
Bank of America, for instance, right now is, for lack of a better term, and again, this is happening out there right now, they're almost trying to get out of the lending business altogether.
They're trying to not do loans.
Because they bought Countrywide and they got a little stung, let's be honest, okay? They lost a lot of money, and their stockholders are not real excited about the losses that they've had from this. And so they've changed, their CEO has changed their focus, and they're into different types of lending, not so much home lending.
Right.
So one of the things that you want to make sure that you do is you want to make sure, and I want you to understand, Bank of America is a great company, and I'm not talking negatively about them. I'm saying this is the reality right now.